We now have all the data for what happened in the battery electric vehicle market for 2023. We're going to review charts created by Zill, a user on X, that reviews 39 manufacturers across the globe and see who are the winners growing market share and who are the losers losing market share. There's going to be a few surprises here. So I've got Larry Goldberg joining us. He's a multi-entrepreneur. Thank you so much, Larry, for joining me again.
Thank you, Herbert, for having me.
So we love looking at charts. The problem with charts, like they give you great info sometimes, but sometimes there's, you got to like understand them a little bit better, see what they're truly telling. That's why I wanted you to look at these charts, explain to me how we should properly interpret these. So there's a user named Zill. He's on X as ZIL_LLIX. He's amazing. He has these incredible tables and charts that he produces, as well as another guy named AJ, which I'll show his chart also. So he finally showed the 2023 BEV sales report. It covered 39 manufacturers, many brands, Europe, Chinese, and otherwise. And he called it the ultimate sales chart, which now represents 93% of the total global market for 2023. So it's a very complicated, complete chart. And he said that 2023 is a clear year of winners and losers. The price war started by Tesla at the beginning, together with the unprecedented growth by BYD, showed massive shifts in the market share, with the growth rates of nearly every BEV manufacturer being severely affected. So the winners are BYD. They grew 4% market share, Tesla by 1% market share, Aeon, BMW, Mercedes, and Toyota. And I believe, when I understand this, it's market share against what they had last year to what it is now. So you see at Toyota, they're at the bottom of the pack. They're barely selling any electric vehicles, but they grew 0.9% compared to what they were. Is that the way to interpret this?
Yeah, I mean, these are spurious numbers, because it all depends on where you started as to what your growth in the market share percentage was. It's a bit silly, actually. This is not a really good way to compare.
Because as you'll see, we'll show folks that electric vehicles, anybody's making EVs is growing. The EVs is growing. So comparing them to their own market share, it's like they're growing against the gas cars. But it's still interesting, I think, to understand who's actually growing by how much. Pretty much everyone else, other than these EV makers, they actually lost. They grew by pretty much everyone else, but by less than 1%, with the exception of IC. The following charts include market share distribution. Okay, so very, very complicated chart. Let me just walk folks through it very clearly. If you look at the red column in 2021, that is Tesla. So you can see Tesla here. 2022, it grew. 2023, it grew. So it's growing quite quickly. BYD, it's on its own chart as well, own column as well. You can see how slow they were in 2021. But boy, they jump quickly by 2022, and then they're catching up to Tesla by 2023. So everybody knows they've been following BYD's growth is significant. They have over 20 different trims of their cars, different kind of cars, by the way. So they're targeting every single market segmentation, price point wise. Then the blue here is the European electric vehicle manufacturers, BMW, Volkswagen, Audi. So they're all stacked together. So everybody's growing, even at the European ones. You can see that they're all growing. Again, EVs are doing well. And then this column here is the rest of China. So BYD separated out the rest of China. And then this column here is Koreans and Japanese. So you can see that even the rest of China, they're growing big. And you can see just the number of companies that's being represented there. SAIC is still very strong. Geely strong. These guys are the ones that are out there. And you want to comment on this table?
Yeah, the first thing is what's missing.
What's missing? The gas cars? I don't know.
I'm not going to give you too much time to think about it, but the US manufacturers are missing.
Oh.
And why are the US manufacturers missing?
Because they use the Chinese to make the cars for them?
No, because they make virtually no cars.
They virtually make no cars. Yeah. Like less than 20,000, maybe 200,000.
Yeah, there is tens of thousands. So the whole country would be a tiny little bar. It would be akin to the bar for Toyota for this year. So
gotcha.
So it's a terrible, terrible, terrible reflection on the non-Tesla manufacturers in the United States. That's the first thing to be derived from this chart. The second thing to be derived from this chart.
Just pause for a second. Here they are.
Okay, they're the top hat.
Like they're right there. They are. There they are.
Well, I think that kind of makes my point. You know, as a country, without Tesla, they are, they're a tiny percentage of the rest of the world. Tiny percentage. So that's the first thing I would say. The second thing I would say is that what distinguishes Tesla from all the other manufacturers is its lack of product variability. So it doesn't cover the whole market. Tesla have 4 premium sedans in the premium price category and spent the last year, excuse me, I've really got a bad cold. My first in 5 years, by the way, maybe even 6 years. But so Tesla, if you were to choose a excuse me, if you were to choose an OEM that was different from all the other OEMs, you choose Tesla for that reason. They have 4 distinct vehicles. You mentioned BYD's 20 plus. Even Stellantis, which is a relatively small share of the market, has got, 12 vehicles. I mean, Volkswagen, you've got Volkswagen and Audi as 2 separate cars, Volkswagen, Audi, and Porsche as 3 separate manufacturers. Really, they're one company. And look at their variation of vehicles, although I think now Porsche is a separate company. But my point is that Tesla, the comparison to Tesla here is reflective of Tesla's weakness and its great strength. Its weakness is its lack of vehicles in the lower tier and its penetration of vehicles with its, premium vehicles. So they talked about price war. I would prefer to say it wasn't so much a price war as a repositioning of the Tesla vehicles. Tesla repositioned its vehicles from this top tier pricing to this middle tier pricing. Now, the middle tier is still not a volume market. And so Tesla hasn't entered that volume market, whereas BYD and the other Chinese manufacturers, or for the most part, most of the Chinese volume manufacturers, have really focused on that tier of the marketplace. So we are going to see a continuation in the coming 2 years of Tesla being relatively stable, growing, a little bit, but growing nothing like they were growing in the last 5 years, until the arrival of next gen. And then after the arrival of next gen, we're going to see an explosive growth in Tesla again. But where are the US manufacturers? What are they going to do? And then, where is BYD going? Are we going to see continued growth of BYD? The only way BYD is going to continue this level of growth is to grow in Europe and ultimately in the United States and in the third world. Well, the numbers aren't going to be very large in the third world. In the US, it's going to be very difficult for them. It's going to take them several years to source all their production in the US because they can't import into the US anymore. And so really it's going to be in Europe. Is the European market large enough for them to sustain those levels of growth? I don't think so. So taken as a whole, if we just balance the whole thing, I think we're going to see continued growth of the EV market, explosive growth, if anything, and there will be the growth of some of the other labels other than BYD and Tesla, somewhat leveling the playing field. Will Tesla's growth slow down? Yes, it will, temporarily, until the introduction of the next gen, and then everything turns on the success of that next gen for Tesla. So that's how I see the next couple of years.
Nice. Agreed. And so let's take a look at who are the actual leaders in battery electric vehicles. This table does a very good job of doing that. This comes from AJ. You can see down here at ALOJOH. Yeah, that's it.
He does a fantastic job. His slides are always so illustrative. It's one thing to put a bunch of data onto a single slide. It's another thing to make that really pop and to be able to explain what's happening. And here we see it. It's very interesting.
Mhm.
Tesla is the lone US champion, but champion of the world. BYD is the winner in a race of many Chinese manufacturers, and they've done an incredibly good job, although they make very little profit per vehicle. It's a classic Chinese manufacturer. Volkswagen is the staid, stolid, European manufacturer who, just given their massive market presence, and given their early entry into the electrical vehicle space because of a very visionary CEO who they fired as a result of him being visionary, they have a really good position, but it's stumbling along. It is not really exploding. Then we have BMW again. In the luxury corner of the market. German manufacturer of extreme engineering skills, who showing their skill by, rapidly adopting the electrical field. And that's true of Mercedes as well. But both BMW and Mercedes are not large volume manufacturers. They tended to be, in the area of competition that Tesla focused on earlier on. And I think that they are definitely serious competitors. And then we have the rest. It's really hard to comment one by one, but we can see that the US are really dragging way behind. The other European manufacturers are way behind. And then, we have, those are all also runs. And then, some startups from China, Neo, Xiping, Geely, these are, so there's startups, and there's also some, legacy companies that are really trying. I mean, I don't see SAIC on this. Are we missing SAIC? That's surprising to me.
Yeah, I don't see it. Maybe interesting. So so that's a very good point. Everything you just made. Now, this is misleading in many ways. So, for example, Volkswagen, Sandy Munro, and a bunch of others are believing that they may not survive as a company. So even though they're kind of showing well here, people believe BMW is going to do really well. They've really embraced electric vehicles. They're making all the right moves. They seem to be possibly a winner. We've heard that people believe that Hyundai is also, and Kia, they're also very strong in terms of their entrance into electric vehicle. And then you've got companies like Rivian. I mean, Rivian, they could survive, right? They're pure EV sale. They've copied Tesla quite well. They seem to be on their path. They've got a good product. So I think, just because, of course, they're an early stage startup, so they look like they're far behind, but actually, I think they might have a chance. We think Lucid will lose money. They'll be down. GM's going to be down. Ford will go down. Yeah.
There's many a slip twixt cup and lip. These stories are not printed, in stone. Every company has the opportunity. The industry is young enough yet that every company has an opportunity to reinvent itself. There's no doubt in my mind. Ford are really there. It's hard for me to believe that Ford will not survive, because Ford, are still family owned. They still have an impulse to survive. General Motors is different. I don't see their impulse to survive. I see their impulse to maintain their bureaucracy. I see no indication that they're prepared to drop their bureaucracy. Mary Barra is celebrated and given all kinds of kudos when, in fact, General Motors have made terrible moves in the last couple of years. So I think the story's not fully, I don't think the story's been told. I would be very surprised to see Ford go down. General Motors is it's a US is a champion. If this administration gets reelected, they will be protected for another 4 years. Who knows what happens after then? So, but these are marginal stories. These are no longer global stories. These are no longer companies that are going to create the history of the vehicle in the next 50, 100 years. The vehicle in the next 50, 100 years is going to morph dramatically, and Tesla is going to be on the cutting edge of that. After all, this whole slide deck exists because of Tesla. And whatever Tesla invented 10 years ago, they are completely reinventing. So we're coming to the end of chapter 1 of Tesla. In 2025 and 2026, we're going to see the opening of chapter 2. And so, all the commentary and the criticisms and the carping and the negative stuff, all of that's going to change, because when chapter 2 comes, there's going to be a massive impact on this whole market altogether. Mark these words.
Yeah, no, it's a good reminder. Tesla was the one who created this industry in the first place. Nobody would be making electric vehicle cars, or maybe a few, or dabbling, but it wasn't. It was because of Tesla. So I want to share some more information here, which is very interesting. So, you heard that BYD is surpassed Tesla. What they were talking about was Q4. So if you look at the Q4, which is this light bar here against the Q4 of Tesla, they beat the 529 versus 485. Tesla for the first time, but they're still lagging behind, and they're probably going to, surpass Tesla, because Tesla is going to be slowing down its growth for 2023 before they do the small vehicle. But once they put a small vehicle, like you were saying earlier, I mean, people keep talking about how BYD is going to kill Tesla, but Tesla's going to, at least take some of that market share. But again, we should stop comparing electric vehicles against electric vehicles. everybody's growing. The market for electric vehicles is growing. Here's another way to look at it in terms of just pure sales. Tesla's here, 1.858. Then you got the BYD, you got Volkswagen Group, SAIC. I wanted to point out here, which is Li Auto's in black. And the reason is they actually have a very interesting approach to electric vehicles. They're an electric vehicle, but they actually have a gas combustion engine, a smaller one, that can charge the electric vehicle to give them extra range. It's a very different strategy than everyone else is doing. So that's why they're in black. That's just one way to look at it. And if you want to compare them to what they were the year before is the white, and the 2023 is the red. And you can see the growth of who's growing compared to the year before, and who's kind of just staying flat to what they were a year before. Everyone else below here is basically just moving along. And then this is just another way to look at this too. Just instead of a vertical view, it's a horizontal view. See things. Any comments on these tables?
Yeah, I mean, I would just say that history is history. History is not the future. In order to understand history, one of the great lessons of history is that in order to understand history, you don't look at the trend, you look at the reasons for the trend. And that in itself is not dispositive, because those reasons, there are so many ways to misinterpret or misunderstand the reasons, and you cannot project those reasons to the future. So I look at all of these slides with, jaundiced eye and saying, that's what happened. Now I can understand a little bit better about what happened. That's interesting. But what's coming? And then you have to look at each one separately and understand the strengths, weaknesses, what are the threats to their position? What are the opportunities with their position? So it's and I kind of alluded to that in the earlier slide. I think each one of these companies have a will to survive and a will to win. And that to me is one of the most important measures. And that together with their product strategy. So it was clear to me that we were faced with a significant pause in the Tesla product lineup, and I often referred to this in the past. And I think we have a very interesting future to come. BYD is an interesting case because BYD, their product strategy has been fantastic. But if you look at the actual cost of doing business and their structure, the employment structure and their cost of doing business and so on and so forth, you have to be a little, and their approach to how they sell into the marketplace, you have to be somewhat concerned with their ability to, actually expand globally and operate globally, and operate profitably. And then you have, companies like Volkswagen who are all over the map in strategy, all over the map, but they have multiple lines of business and they have multiple vehicles. So, maybe they'll survive. And then, and then we have the American manufacturers, and I've spoken about them at length. So for me, it's interesting, but it's not dispositive to look at the past.
Okay. And then one metric that can actually explain a bit what you just said there is free cash flow. You wanted me to bring up these charts, this quote from Jeff Bezos. It's free cash flow that tells you whether or not what's going to be the future. So let me share this quote that you sent me. Jeff Bezos said this, right? He said, our ultimate financial measure and the one we most want to drive over the long term is free cash flow per share. Now, before I share the cash flow projections of all these car companies, what is your comment on this?
Yeah, Jeff Bezos is one of my great idol. I mean, I idolize the man because he represents, pure intellect in terms of running a business. Jeff Bezos, every year until I think last year, he published with his financial statements, his chairman's statement. He never went to, by the way, a shareholders meeting, annual, and he never attended the end of quarter meetings. But he did share in writing his philosophies or his remarks, and two things stood out for me. The one is his day one quote. You know about Jeff Bezos' day one quote. Every day for Jeff Bezos was day one. Every day he arrived at work and said, this is the first day. And so, that was one of these driving spirits. But the other was all about cash. And if you look at Amazon's financial statements every year, and in fact, we've just gone through a period again like that, where profits were terrible. I mean, actually, he made losses in, I think it was last year or the year before. And if you look at these first 10 years of existence, there were no profits. And then even when the profits came, they were paltry, and then they were, up and down. Sometimes they made a profit, sometimes made a loss. But that was simply accounting methods. If you look at his cash, every year his cash flow got better and better and better and better. Why? Because when Amazon sells something, they sell it for cash. They get the cash before they ship. When Amazon buys something, they pay that in 60 or 90 days to their suppliers. And that's sometimes 6 days after they sell it, not after they get it delivered into their warehouse. And what does that mean? It means as long as their sales are rising, their cash flow, their cash keeps piling up. And what did Amazon do with that cash? Every day was day one. They looked upon that cash, said, what's the best thing we could do to invest that cash? And they invested it. Sometimes they made poor investments, but by and large, they made massive wins with their investments. And, they would invent new businesses every other year. Ultimately, they invested, Amazon Web Services, AWS, which, changed the world. Cloud didn't exist before Amazon Web Services. I mean, there were shared services, there were some data centers, but Amazon Web Services really concentrated what was the biggest pain in all corporate computing, this pain of trying to stand up an environment. I remember it would be, 6 months to 2 years in the corporates we worked with to get an environment stood up. That was our biggest impediment to sales to corporates. But Amazon made it possible in 5 to 15 minutes. And so when you go from a year to a year and a half, a quarter to a year and a half to stand up an environment, a computing environment, to a matter of minutes, it changes the world. It certainly changed the world in the corporates, and certainly changed the entire digital world. So what I'm saying is that Jeff Bezos operated from a philosophy, and it was a winning philosophy, and he stuck to it. And so he's my hero.
And the reason why he says that, free cash flow per share is the one ultimate financial measure is because everything else that you see can be, financially maneuvered. So even sales, there's channel stuffing that the legacy automakers do, earnings, these kind of things can be maneuvered. So let's take a look at cash flow.
That's only one aspect of the cash issue, and that is, the financial maneuvering. But that's not the only issue. The issue is that when you have non-cash accounting, the actual cash versus profitability could be such that you're always short of cash and you cannot invest more. So therefore, the growth potential of that company is very restricted.
Gotcha. Let's take a look. This is AJ providing this chart again, quarterly perspective of free cash flow trends by company. And so if we take a look at this, GM has the most cash flow, actually, it looks like. But if you look at it by quarterly, this is the blue line. They've dropped precipitously in the last several quarters. Then you got Ford doing the same thing. A lot of people are falling except for Tesla. Tesla's the one that is just skyrocketing up there. Look at Toyota. Toyota's cash flow just plummeted. Obviously, we need to understand better what's happening, but this is a very good measure of what's happening. What happened last year?
Well, Toyota's cash fell because I believe that they're making some massive investments. Plus, they had one of their subsidiaries got into severe trouble, as I recall it. But, Tesla have really focused on maintaining their cash by controlling costs, very, very strongly controlling costs, and managing inventory very carefully. Now, these cash flows do not tell the whole story. In OEMs, you really need to look at their cash flow and their dealer's cash flow and combine them. Why? Because if the dealer's cash flow is really bad because they are buying too many cars and they're holding cars on their lots and they're borrowing a huge amount of money to do that, then while the OEMs look good because they're getting cash for the cars they're selling the dealers, the actual cash flow of the enterprise, including the vehicles that are on the dealers' lots, are not reflective of the whole. With Tesla, you see the cash impacts as they happen in the business from end to end, from supplier network all the way through to the customer. And you don't see that with the OEMs that use dealer networks. And so I'm always suspicious of these cash movements with these OEMs.
True. All right. So we took a look at the battery electric vehicle market in 2023. We looked at who's gaining, who's losing, but everyone is going up. And then, of course, we're looked at the cash flow. It's just to see who's strong, who's getting weaker over time. Thank you so much, Larry. Follow him on X at Tesla Larry on X. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.